The consensus is building, though, that this is a one-direction trade at the moment. It's getting quite crowded, that we're going to be very flat next year and perhaps even invert or look at inverting at the back end of next year. Do you share that view?
I don't. So, listen, I mean, the bid, we think we're going to be in low interest rates for a long time, but can 10 years move up to 250, 275? Yeah, we think they're going to go there. The dynamic around, one of the things, today's average hourly earnings gives a bit of the sense that inflation is not accelerating. When you take actually the better numbers, inflation is actually picking up. You're actually seeing some real dynamics around when you take the compositional effects out of a number like average hourly earnings, you look at some of the better indicators, you're running at actually mid-threes type of wage growth. So, no, we think that you can actually get rates a bit higher with inflation picking up.
So let's think about the shape of this curve. Over the last year, we're down about 71 basis points. We're south of 60. Going into next year, how do you want to be positioned? How are you advising clients of BlackRock to be positioned on the Treasury curve?
Yeah, I mean, one of the things people have to think about is, we've talked a lot on your show for years now about the curve should flatten, the curve should flatten. The curve's gotten unbelievably flat. Could you go a few more basis points? For sure. However, you think about it, if we're going to be in a rising rate environment, which we are, the Fed's moving, ECB is now going to be buying less securities starting in a couple of weeks. We think the dynamic is going to be important is make sure you're protecting your yield, your return. And so we like the front end of the curve. You can buy assets now, the 2 to 5 year part of the curve. You're seeing that demand for munis. You're seeing that demand for short duration product. You're seeing that demand. You carry really well in the front end for 2 years, 3 years. You couldn't get any yield in the front end of the curve. If you want to protect the way your returns, diversify globally and make sure that you're not taking too much interest rate risk.